Welcome back, guys, to another Zero DTE podcast, and we're on season 2, episode 28, where Ernie talks about volume profile. So make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description where you can find Ernie's course. And as always, I hope you enjoy, guys.
This is a morning show where I'm usually broadcasting in the afternoon from 3 to 4. And although I've been lackadaisical on that lately, and that's mostly because the growth of our service has just totally exploded. We have triple the number of trial members at any one time now. And it's just going crazy. I've had to hire 2 people, and we're developing all new kinds of apps. It's just really insane. If you'd like to try out the service, go down below and increase the load that's already on me at 0-dte.com/try for a 4-week trial. Today we're going to talk about volume profile. I haven't done one of these in quite some time. I used to do a regular Monday morning show where I would do a volume profile market structure analysis. Now, those of you that may have been following me for the past, 8, 9, 10 years will know that my volume profile analysis is probably the reason why most people in crypto are using volume profile today. I've trained literally thousands of crypto traders on volume profile back in 2016, 17, 18. And I've also taught a lot of people in just regular markets too. It really doesn't matter what market it is. As long as you have volume profile is perhaps the premier tool for you to use. I don't see any reason why to use any sort of technical analysis if you have volume profile. It gives you everything that you need, and it's objective, unlike almost all technical analysis, which is using lagging indicators and some sort of calculation that you just wonder, well, what's the applicability? Volume profile will tell you where support and resistance is, where liquidity and illiquid zones are, how price is likely to behave as it traverses across the structure. It gives you everything that you need, and it's in real time. And that's the crazy part. There's this concept called market memory. And I guess it's a lot like if you had a cut from, say, 10 years ago, and you still have that scar where you got that cut, yet the skin around that cut has completely changed. There's no cell There's no living cell around that cut that exists today that existed when you got that cut. That's like what market memory is. When there are abrupt changes in the market, in the volume in the market, it leaves an indelible mark in the market that is actually applicable today in real time as an influencer on price. It will show you, like I said, where liquidity is, where illiquid areas are, where there's inflection points in the market from these abrupt changes in volume. And with volume profile, I've completely shed the need for any kind of technical analysis or indicator or oscillator or anything. So what we do on a periodic basis, well, about every 3 weeks, I update the profile so that, and it doesn't change that often. Now you might think, every few days, what's going on there, Ernie? The truth is that because you have this market memory aspect to volume profile, I want to look at as much volume as I possibly can going back as far as I can. And profiles that were constructed from price action that happened as long as 2, 3, even 10 years ago are influencing the market today in real time. And more so than any trend line that you could ever put, any oscillator that you could put, any kind of moving average, all of that stuff is superfluous compared to volume profile. It will show you where the market's moving from one place to the other. And we'll go into that later this week with another show. And after I do the profile today, then later this week, we'll do some analysis in using the profile. But right today, I'm going to show you how to actually get in there and create the structure, the structural analysis, and how we interpret it. All right. So now we at 0DTE, we trade basically 2 things. We're trading the final day of expiration, the 0 days to expiration on options for S&P derivatives as well as the NASDAQ index. So we trade the SPX, which is the S&P index, options on that, options on the E-mini S&P futures, as well as the mini index or the micro index, which is 1/10 the size of the SPX, called the XSP. And we also trade options on the NDX. All of those have 5 expiration days per week. So that presents an incredible opportunity for day traders where you have all of these things lining up for you. And of course, our methodology is like any other, just pretty much like a volume profile analysis, like any other zero DTE methodology. And that's because it is born out of an actual pro methodology. All right, we use extreme asymmetry as well as the premium collection, and we use butterflies in a very unique way. All right, now to the profile. So first thing that we're going to do is go over to our handy dandy chart. Let's see, we do the secondary display. You'll see these lines in my charts. And I don't know if you notice here, but price is bouncing off of this line and off that line. And you went, how'd that line get there, Ernie? What is that line? And over here, it was finding resistance, and et cetera. And if you go back for a long time, you'll see that this sort of thing happens. But anyways, these lines are drawn directly from the profile. They're used to show where there is an abrupt change in volume in the long run. Now, right now, I'm just looking at a 45-minute chart. It's only showing a couple of weeks worth of data. So the profile that we see for that couple of weeks doesn't have the same power that the profiles that go back a year or 2 years. And that's what we concentrate on. So all of these lines are created from the bigger profile, the more inclusive profile, because of that concept that I said before, market memory. All right, so the first thing that we do is we go to our daily chart. We're on the E-mini S&P futures. We're going to do the profile both for the E-mini S&P as well as the NASDAQ. And you can see I already have some lines in here, and I'm going to erase all of them and bring in new lines so that we can do this all over again, so you can see exactly what's going on. So let's remove all the drawings, starting completely fresh. As you can see, the volume profile, the way I have it set up, is super simple. I get rid of the high value level and the low value level. Those are totally unnecessary. I also get rid of the up and down volume, totally unnecessary. So the other thing I do is I extend it way out so that it accentuates the size of the nodes and the valleys here. And that's important so that I can very clearly see where the edges of those. It's because the abrupt changes in volume, those are the inflection points in the market. Those are the points that you have to identify so that when you zoom in, you can see those lines, see where those abrupt changes are. And that's what's going to be providing your real-time support and resistance and your liquid and illiquid zones, and also give you a great insight to the potential behavior of price as it traverses that profile. And like I said, we'll show that later in the week. That allows you to create scenarios in your trading, so in your day trading. And so you can come up with a number of different scenarios, a bullish, a bearish, and maybe one that's sort of consolidating or whatever. And the lines that we're going to draw are going to directly impact how you're going to set up your trades. So that's the power of volume profile. All right. So the first thing that we do is, as I said, we set up our profile correctly. We extend it way out so it's accentuated, exaggerated. And then we come up. Now we're using TradingView, by the way. And TradingView is by far has the best implementation of volume profile for the price of any other tool out there. If you're thinking, hey, I'm going to use the free version on TOS, don't, because you will just be crazed by the inaccuracy and very poor performance of the TOS version. There are many others that are out there, and I've tried them all. I've been using this for more than a decade, and I'm telling you, TradingView, bar none, is the absolute best. I'm not sponsored by them. I'm not an affiliate or anything like that. I'm telling you straight up, this is the tool that you need to use. All right, so what we're going to do is we're going to select the horizontal ray as our way to identify these levels. And the first thing I do is I note where we are, right? So here's price right now at 41.94. So I want to concentrate on the profiles where price is likely to go. So I'm going to say, maybe 100 or 200 points above and 100 or 200 points below. That's a good start. And so what I want to do, first of all, is identify where the nodes are and outline those. So I'll go and I'll find the steepest part of that node. It'll be somewhere in the vicinity. So it's like, it's not exact, right? And I'm going to go on either side of it like that. Now, for nodes, I treat them a little bit differently. You'll notice that I'll have purple lines and yellow lines. Now, usually on nodes, I make those purple because I like purple. So let's make those purple so that when we're zoomed in, we know exactly what that line represents. So there's the purple lines. Let's make them a little thicker so we know that they're nodes. Like that. We'll make them 3 points thick. All right. Now we're going to do the yellow lines for all the other features of the profile. And all the other features are these super deep crevices. Okay. So let's go to a super deep crevice right about here. You can see it right there. See where it goes down? Right there. We're going to make that one yellow. And we'll make that thinner. All right, so let's make a few more of those where all the crevices are. Put one right there, one right there. Now, there's also something to be said for some of these other features. Anywhere where you see volume changing abruptly, you really want one of these or one of these deep crevices. So let's get them all in place. There's one right here. And that looks about it for now. I can go above and below here. As I said, we'll try to get all of these different things in place. Now, this edge here is definitely significant. Also, there's a node below here that isn't as well formed as the one that we have here, but let's try to get its edge as well, probably somewhere around there. And the reason why we want to get those edges is because the act of either leaving a node or entering a node is pretty significant. You're going from a low liquidity area where there's an absence of volume to a high liquidity area where there's a lot of volume. So generally, you can think of the nodes as places where the market consolidates, and the area in between is where the market is searching out new value or where it tends to trend. So things start slowing down in the thick and muckiness of the node, and they speed up as they get into the lighter area, low volume areas of the antinode or the low volume level, or what we call the volume well. That's pretty much it. There's our volume profile that we have for today. I guess I could add a couple more in here. Let's go a little bit below because I'm anticipating price going anywhere and everywhere. Let's see. So here's some areas inside of this. Let's see. This is kind of tough because this is a big node. So we'll go right on the edge. So there's going to be some of these lines in between, purple lines. So we'll put one right there. And then we'll take another purple line and we'll outline the bottom of that node. I don't know, somewhere, it's hard to tell. Let's say it's right here. All right, so there's the majority of that node. And this is a child node or an appendage to the node. All right, and notice that I'm not really interested in the POC of the node, and that's because the POC has little relevance here when it comes to acting as support or resistance level. And I know that's contrary to probably what you've ever been taught, but I'm telling you, you go and do a statistical study on it, and you'll find that that is absolutely true. Now, when we use these, we zoom in. So typically we're doing our trading when we're at this level here. So you can see the lines show up. You can see that this is a node here. Here's the top and bottom of the node with the purple lines. And then here's our support and resistance points. So next week, or later in this week, as I said, we'll go over another video and we'll talk exactly how we treat each of these lines. All right, let's go back. Do the big head. And I want to thank you for joining me on this market structural analysis using volume profile. Later in the week, as I said, we'll show how we use this in our trading of zero DTE. You will be fascinated. Thank you very much. Time for the music. See ya.